All right, let's jump right in. The crypto market, man, it's got this weird energy right now, doesn't it? It's like half the people are super hopeful and the other half are on edge. So today, we're going to cut through all that noise. We're going to dig into what people are really saying about the biggest names in crypto, and our goal here is to give you a clear, actionable picture of what's going on. Let's get into it.
Okay, so what's the overall vibe out there? Well, if you look at what the community's been talking about, the mood is, let's call it cautiously optimistic. You've got a huge chunk, 70%, feeling pretty bullish. They're looking at potential rebounds, good news on the horizon. But then you've got that other 30%, and that's where the caution comes in. That's the part of the market worried about liquidations, regulatory stuff. It's what's keeping everybody on their toes.
And that really brings us to the big question, right? The whole reason we're doing this. With this kind of split personality in the market, how do you figure out what's real and what's just hype? Where are the actual opportunities? And maybe more importantly, what are those hidden risks that could bite you if you're not paying attention? Well, that's exactly what we're about to figure out together.
So naturally, we have to start with the big one, Bitcoin. It's really the anchor for the whole market right now. But what's so fascinating is that the feeling around it is this mix of real, solid strength and some pretty healthy skepticism. Let's break down both sides of that coin.
So, why are so many people? We're talking a massive 78% bullish on Bitcoin right now? Well, it boils down to a few key things. First, you've got what's happening on the charts. It's showing real resilience, and the big players, the whales, they're actually buying when the price dips. Then there's the bigger economic picture. Things like potential rate cuts. That makes Bitcoin look like a pretty good hedge, right? And finally, you just have this steady drumbeat of adoption. The whole digital gold story just keeps getting stronger.
Okay, but let's not get carried away. We have to look at both sides. On the one hand, you've got these strengths that are backed by actual data, right? You can see the whale accumulation, you can look at historical patterns, that stuff is real. But on the other side, you have to wonder if some of the hype is a little overstated. I mean, we just saw some pretty big outflows from the ETFs, and let's not forget, Bitcoin is still tied pretty closely to the NASDAQ. If the stock market takes a dive, Bitcoin could easily get pulled down with it.
So this all boils down to one absolutely crucial number to watch, and it's this one, $68,000. This isn't just a random number. It's a huge psychological level that has been acting as some serious support. For the bulls, everything, and I mean everything, depends on holding this line. It's the launch pad for any potential move higher. So yeah, if there's one number to keep your eye on for Bitcoin, this is it.
All right, next up, let's talk about Ethereum. The story here is, well, it's a little different. It's all about that institutional interest, a lot of it driven by yield. But, and this is a big but, it comes with a pretty serious warning label.
So what's driving the positive vibes for Ethereum? And there are a lot of them, about 72% positive sentiment. Well, for starters, institutions are scooping it up, partly thanks to all the buzz around new ETFs. The charts are also flashing some pretty bullish signals, but maybe the biggest draw? The yield. Investors are literally rotating into Ethereum for its staking rewards, which is something Bitcoin just can't offer.
And this is where you really see the two sides of the Ethereum story. The fundamentals, they're rock solid. You've got staking actually reducing the supply of ETH, making it deflationary, and with over $100 billion locked into its ecosystem, you can't argue with its utility. But, and here's the catch, the market is swimming in leverage. That makes Ethereum super sensitive to whatever Bitcoin does, and it creates a very real risk of things getting overextended if the market suddenly turns south.
Okay, so for Ethereum, the magic number we're all watching is $3,800. And again, this isn't just some line on a chart. This was a major point of resistance that is now hopefully flipped into support. If ETH can stay above this level, the path is clear for another leg up. But if it breaks, we could be looking at a pretty nasty drop. So yeah, all eyes are on 3,800.
Okay, let's switch gears to the high-speed challenger, Solana. Man, if you want to talk about hype, this is where it gets real. The growth in its ecosystem has been absolutely explosive. But with that kind of hype, you also get some serious headwinds, mostly in the form of insane volatility.
I mean, you can just feel the excitement around Solana. 75% bullish sentiment, that's huge. The charts are screaming breakout. But just look at its ecosystem growth. DEX volume up 35%, that's insane. It's just sucking in users and money with its low fees and high speed, which makes it a go-to for traders looking for the next big thing.
And here's the thing, the numbers absolutely back up the hype. We're talking thousands of transactions per second, user growth that's just off the charts. It's generally crushing its competitors on scalability. The danger, though, is on that other side of the coin. Because it relies so much on DeFi and, let's be honest, meme coin mania, it is incredibly volatile. It's not uncommon to see these gut-wrenching 20 to 30% corrections that can really trap investors who aren't careful.
For Solana, the line in the sand is this support zone right around $175. This is the area where we've seen a ton of buyers step in recently, so it's become a critical battleground. If we see a strong bounce from here, that's a great sign for momentum. But if it slips below, well, that could trigger one of those nasty volatility traps we were just talking about.
All right, let's talk about our final asset for today, XRP. Now, this one's a totally different beast. Why? Because its fate seems to be tied almost completely to the news cycle. We're talking about announcements from Ripple, the never-ending regulatory drama. It's a real game of news and nerves.
So what are the XRP bulls hanging their hats on? Really, it's three main things. First, you've got some major institutional moves like Ripple itself pledging $1 billion from its treasury, which suggests they're accumulating. Second, the charts are starting to show some signs of life, some signals of a technical recovery. And third, you know the drill, any piece of good news on the legal front or a new partnership can send waves of optimism through the community.
And this really gets to the heart of the XRP dilemma. On one side, these news-driven pumps are real. I mean, historically, when Ripple's treasury makes big buys, the prices spike 20, even 40%. So there's a pattern there. But when you look under the hood at the derivatives market, it looks a little weak. The low open interest suggests a lot of the buying is speculative, and that means the momentum could be, well, fragile. It could vanish in a heartbeat.
So for XRP, what's the all-important level? It's this price floor around 48 cents. For the bulls, holding this long-term support is absolutely non-negotiable. It's the launchpad they need for a real breakout. If it fails to hold this level, that would be a major sign of weakness.
Okay, so we've torn apart each one of these assets. We've looked at the hype versus the reality. But to get the real actionable takeaway here, we need to put them all side by side. So, how do they all stack up?
All right, this is really the money slide. It puts everything we've talked about right next to each other. You can see Bitcoin has the most positive sentiment, but maybe a little less short-term upside, and its main risk is those ETF outflows. Then you have Ethereum and XRP, both with the potential 25% upside, but they get there in totally different ways, with totally different risks. ETH is tied to BTC, and XRP is all about regulation. And then, all the way on the end, you've got Solana, with the biggest potential upside, but also the biggest risk of getting liquidated in a flash.
And this chart just makes that risk-reward trade-off crystal clear. You can see Solana way out in front with that 30% potential short-term gain. But now you know that comes with some serious volatility attached. Ethereum and XRP are right there in the middle of the pack. And Bitcoin? It's your more conservative play, at least in terms of short-term returns. It really all comes down to what kind of risk you're comfortable taking on.
And all of this leaves us with one final, and maybe a little provocative thought. We've laid out the hype, we've laid out the reality, and the very real risks for each of these huge assets. So the question I want to leave you with is this. In a market that's this wild and this full of opportunity, is the biggest risk just playing it too safe? Thanks for tuning in.